Global corporations always have one thing in common. They want to sell their products and services for a profit. But to grow and expand, they need money and lots of it. One interesting way businesses can get lots of cash, and that quickly, is by selling company shares on the stock market. If you are a beginner to the world of stock investing, then keep on watching this video, where you will learn how the stock market works. Welcome to teachademics.com, the place where people come for a financially free tomorrow. If you have not subscribed to our channel yet, you're missing out. Make sure to hit subscribe and activate the notification button. Back in the 1600s, the Dutch East India Company sent their ships all across the world for buying and selling valuable goods like spices or gold. As their business venture was extremely expensive, they came up with a brilliant idea that would allow them to receive big financial funds. The basic idea was that everyone, no matter what their social status, could buy a small share of the Dutch East India Company and would in return receive part of the ship's profits, depending on how many stocks someone owned, of course. Fueled by the enormous potential for building one's own wealth through investing, many people took the opportunity, and the trading of shares began, and with it, the very first form of a stock market was established. All the way back to the 1600s until today, companies kept offering stocks to private citizens and corporations. A company's main reason to do that is to obtain significantly more financial means to develop and grow the business. Today's modern stock market is more complex, and there is a lot to learn. During school life, teachers never explained to you how investing and the stock market works. So it's not your fault if you do not have much knowledge on this topic yet. However, the good news is that you can learn the basics easily and fast, which you definitely should. Investing your money into well-chosen companies, or ETFs, exchange-traded funds, can be a great way to significantly grow your savings and income. First of all, what actually is a stock or a share, and what is the difference between them? A stock is a general term used to describe ownership of any company. A share, on the other hand, refers to the stock certificate of one particular company. Holding a specific company's share makes you a shareholder, and you own a small fraction of the business. For example, Apple has over 17 billion shares listed on the stock market, costing currently $115.62 USD per share. If you invest $115.62 USD into Apple, you will in exchange get one small fraction of the company, and you can call yourself a proud partial owner of the world's most valuable brand. Isn't it great? The way you profit from buying shares is when stock price goes up over time, and also through so-called dividends, which not all, but many public companies will pay you if you're a shareholder. What you should know: it's not possible to invest in every company you like, because a company must always be a public company, which it becomes through undertaking a so-called IPO, initial public offering. For example, if you like the business of home renting company Airbnb, you cannot buy a single share. Why? Because Airbnb is not a public company and hence not listed on the stock market yet. But that could change soon, as CEO Brian Chesky announced that he wants to go public within the year 2020 to sell shares of his company. Stock markets are basically where investors come together to buy and sell shares in a public venue. The world's most important and largest stock market is called the New York Stock Exchange, with market capitalization of 25 trillion USD in April 2020. Stock markets are everywhere in the world, and you can imagine them as an electronic marketplace on which companies and all other stock owners can offer to sell and buy their shares. The price of a stock is set by the principle of supply and demand in the market as buyers and sellers place orders. That means, for example, if many people want to buy stocks at a particular company, then stock owners are willing to sell. The price of Apple shares can explode and increase a lot. But likewise will the price drop. If more market participants want to sell stock, then there are people who are willing to buy. If you want to know how stock markets are currently doing, you need to look at the so-called indexes that take a whole bunch of individual share prices and transform them into just one number. The three most widely followed indexes in the U.S. are the S&P 500, Dow Jones Industrial Average, and NASDAQ Composite. The S&P focuses on the 500 largest U.S. publicly traded companies. Dow Jones tracks the 30 largest publicly traded companies. And NASDAQ covers over 3,000 companies servicing the tech industry. Around the world, other countries have their own indexes to measure their markets, like DAX in Germany, Shanghai Index in China, or FTSE in London. If you want to start buying shares on the stock market, you first have to open up a stock trading account, which is called a brokerage account. When you choose a company to open your account with, make sure that you compare as many offers as possible to pay only very low trading fees when you buy and sell stocks. If you've watched until here, we want to say thank you by giving you the following bonus advice. As you start out your journey to learn everything about stocks, ETFs, and what is affecting markets today, there will be a lot of people trying to tell you that for a small fee of only $1,000, they can give you a magic system that will make you lots of money in no time. Please do not fall into this trap. Nobody on earth can exactly know when it's time to buy or sell on the stock market. And it is not possible to predict where market prices will be going. So when it comes to investing your money, be very selective on people who want to give you advice, and that also includes your own bank advisors and circle of friends. As a beginner to the stock market, you should instead know the following. Number 1, take yourself time to learn. Watch more of videos like you're doing now. Study basic and advanced investing knowledge until you know what you're doing. Number 2, start small and don't invest all the money you have. Especially people in their first year of investing make a lot of wrong decisions that cost them a lot of money in the end. So play it slow when buying your first assets. Number 3, do not borrow any money to invest. And even no matter how convinced you are the investment will be a success, please only invest the extra money that you've earned and saved, and it doesn't have to be a lot. You can start investing with as little as only $50. Number 4, be patient and become a long-term investor. Historically, a buy and hold investor is oftentimes the one who achieves the best results. Nobody could be a better example here as the world's most famous investor, Warren Buffett. Number 5, do not buy when markets or shares are currently at their highest price level. As Buffett often says, be fearful when others are greedy and greedy when others are fearful. Meaning you must buy when an asset is undervalued and can be bought at fair or better at a bargain price. If you want to learn more about investment strategies, how a fair stock price is determined, and the buy and hold concept works, we recommend you to read and study the books and knowledge of Warren Buffett. We hope this video was a valuable lesson on your way to becoming a successful stock market investor. Please write questions or topics you want to learn more about below in the comment section. We promise you to read and answer each of you. If you have not subscribed yet, please press the subscription and notification button to never miss out on any valuable video content. Please also like and share this video to help us grow this channel and build a community where people come for a successful tomorrow. Bye for now, and see you in our next video.